Welcome back. Ferris, thanks for joining us today on the Barita Brain Trust think tank. I wanted to have a conversation with you about the overall equity market in 2020 and how to be looking in 2021. So the guys would have just spoken about, so they gave their picks, they gave an overall theme, but I know that you as a top trader on the market, you are in the queue, you're in the market, you can feel the pulse every day. So I know that your perspective on the equity market is typically unique. So walk us through some of the things that would have happened in 2020 and some of the things that would have shaped your portfolio views.
Yes, 2020 was a very interesting year, but especially for the novice investor. I mean, the JSE has been growing over the years, and the JSE would have made announcements about the number of new investors entering the stock markets. And that was largely due to the listing of IPOs and the performance of those IPOs. So those IPOs attracted a lot of new investors to the market. So many of them would have experienced for the first time what it is like to be in a down market. And I think that would have amounted to a baptism of fire. But nonetheless, I think that it would have been a very good experience for them because they get a first-hand view as to what it is like when it comes to buying equities. When you approach your investment advisor, they'll tell you equities involves risk. And many people will say, look, I'm not buying stocks because stocks are risky, right? But then we'll always advise them, look, take a long-term perspective when it comes to buying equities because markets move up and down, but longer term, equities tend to outperform other forms of investment. So we saw in 2020, during the height of the pandemic, March 10th about, the COVID came to Jamaica. We saw a significant pullback in the local equities market, and the combined market never really recovered. We saw a slight recovery soon after, but at the end of the year, the combined market ended down 22%. It's negative 22%. Stark contrast to previous years when the JSE was top performing exchange in the world. As a matter of fact, there's a report that we were second to last in terms of performance. But investors should not be discouraged by that because the fact is, as I mentioned earlier, equities involve long term. So when you're looking at investing, you have to think longer term. So what happened? The major companies, the financial sector, I mean, our market is largely exposed to the financial sector in terms of market cap weighting. So the large companies pull back. And for obvious reasons, we saw where there's a fall off in asset prices. We saw there was a great deal of uncertainty because people didn't know what was going to happen, right? And then there's the induced shutdown by governments to contain the spread of the virus because we didn't have a vaccine or an effective treatment. So that caused the investors to pull back. Right? When we saw the results, it more or less told a tale as to what COVID was like. So we saw a pullback in earnings for many companies with exposure to the tourism sector. They suffered because the tourism sector had to be shut down. And the financial services sector, big banks, financial institutions, NCB, non-performing loans increased. We saw where they were impacted by a pullback in asset prices and a reduction in trading volumes. People were really selling assets to get out, to running for safety. So that was COVID more or less on the market.
Okay, I wanted to touch briefly on that volumes thing. So as you said, the trading volumes would have fallen in 2020. From your perspective, is it that you saw more smaller amount of units being traded on the market? So the typical 100 to 10,000 units trading on the market rather than larger blocks moving across the trading floor?
Right. Very good question, because I would say 2020 was also, you can say, the year of the retail investors. You had a lot of them locally and also overseas. Retail investors, they stayed at home and they found something to do, and that was spending money on equities. Yeah. And I can tell you the volumes were smaller, but we saw a lot more of it. And of course, when you look at the movement in prices as well, large companies pulling back, steep pullbacks, you can understand very well that there are retail investors who can navigate their way through the market. They can get in and out of positions, unlike the institutions that move large volumes. And of course, They think long term too. They can take a blow because when it comes to investing, you have to manage your portfolio. So you diversify across asset classes. So you have the equities and you have your real estate, your alternative investment. So,
but smaller retailers typically play in a smaller amount of stocks and maybe even just stocks.
Right, and in some instances too, they want to just make quick profit. And that's why we really encourage investors to be more disciplined when it comes to investing. Yes, the returns are there, but you also want to take a disciplined approach when it comes to investing. It's not just quick profit. That happens. But you also want to encourage investors so that when you have a market pullback like what we saw in 2020, investors will use it as an opportunity to buy more, average your cost down. So even from a fund management perspective, which is where I sit, I use that as an opportunity to reposition my portfolio to take advantage of a potential uptick in the market. So if investors, for example, bought into the Capital Growth Fund during the steep pullback during the March period, they would have seen at least a 20% return, positive return year-end 2020, even though the fund was down just 12.32% at the end of the year. That was the best performing fund in 2020. And the combined index, which I mentioned, was down negative 22%.
So that fund would have beat the overall combined market. Well, guys, you heard it here first, 2020 was the year of the retailer, right? Retail investors would have gotten a lot more active in the market. So the reduced volumes in the market doesn't mean that participation was less. It just means that participation probably shifted more towards the retail.
Right, yes, definitely. They were more active in the market. But when you look at the APOs, right, and Barita, I think set the trend. We had Trans-Jamaican and we had Tropical Battery earlier, but Barita started with $13.5 billion. That was a significant raise of capital last year. And it means that you have the institutions, they are prepared to invest money, but of course, the APO gives you that sit-down conversation where they can get an idea as to what the company is doing. They sit down with the representatives of the company and get an idea as to what the direction of the company, what they'll be using the new capital for. So that provided some level of comfort for the institutions, and they bought in $13.5 billion. And then we saw other APOs coming into being as well. So that speaks to the fact that yes, you have retail investors, institutions are prepared to invest, but maybe their positioning in the existing shares wouldn't have allowed for them to really expose themselves further. Okay. So they are there, but they are more or less on the sideline, and I think they're prepared to get back into the market.
And just finally, Ferris, just to get your outlook on the 2021 market, what if I know you like to keep it close to your chest, and you like to make your plays within our capital growth fund and have that accrue to our investors that participate. But if you could just give us a little nugget of, one of the things that you have been looking at.
Yes, so I'll mention 3 stocks. Derman, I think our team mentioned it earlier. And of course, would have seen the presentations on Derman. It's a company I've been talking about for quite a while. And I like the company because of management. And you have to look at management when it comes to buying stocks, because that gives you an idea as to the direction in which the company is going and how aggressive the company is. And when you have managers who are more inclined to use debt to acquire new companies. So we see with Derman, they acquired Carbon Flavors and Fragrances, and they also acquired Woodcats. So that has helped to diversify the revenue stream of the company and also increase the margin, because when you're in manufacturing of your own product and you recognize vertical integration, that will allow for you to expand on your profit margin, which is beneficial to the shareholders. So I like that about Derman, the fact that they are doing an acquisition overseas. I think that's something that many local companies should be doing. During the pandemic, you said, boy, COVID really hit many companies. But the truth of the matter is, that was an opportunity for them to look for new areas of growth. And separate, they did that, export, That company I liked as well. So they have been taking advantage of the fact that they are a part of a larger growth motion, and they have recognized the value from being a part of that larger group. So the acquisition of the Nestle manufacturing facility. Decision making, another part of management, which I go back to again. Richard Pandoe. I like Richard Pandoe as a bright executive. I mean,
And a Calabar old boy.
Right, right. So they got out of the loss-making sugar operations, and I think that allowed for them to improve their profits, and it has worked to the benefit of the company as well as shareholders. And Milpak, right? So Milpak, they have been performing beyond their expectations. Last results was pretty decent, and I like that company. And you'd have seen our exposure to that company. I like to keep it close to my chest because I like when investors buy the fund. You're buying Barrita's management and expertise. And of course, we want you to feel confident investing your money with us. As our slogan says, we make money work for you. And that is what we want to do for our investors. And that's pretty much why I tend to keep close to my chest.
All right, thanks, Ferris. And on that note, we'll allow Ferris to go so he can make money work for us all. Yeah. Just can't get it.